recorded. So, good afternoon, traders. Welcome to this special webinar. Well, special in the sense that it's Sunday and I'm disturbing you guys from your holiday, and I'm glad you're here. So thank you very much for that. I would like you at the end of this webinar to share this link, because this is going to be very important. I want you to share this link everywhere on your social site if you can, every one of you, and ask people to share it who are traders. It is important. What we're going to talk about today here is important, and it's going to deal with a lot of questions that I've got for the time that I'm here and questions people are sending. So most things that traders ask me, and if I start with one of the questions that I receive on my email from, I don't know if I saw the person in the room. You can identify yourself if you want, but I'll just say what the email is about, and then, you know, if you want to say it's yours, it's okay. This person was telling me he works in a software company, a high-end software company. He wants to be a Forex trader. I'll make it very short. He started, you know, looking at videos on the internet, all the free videos you could get everywhere, and, you know, trying to grab. First he learned pin bars, then he learned Gartley, then he opened an account and he lost everything. Expected. I think that's pretty much expected if you do that. And then after 6 months, he found me on the internet and he started looking at all my video. He starts to see some change in his trading, but he's not there as yet, right? He still has this, you know, still struggling with that. He's tried a demo account and he's working on the demo right now, right? Basically. So his question was, could you please help me on this to know what is wrong with my trading, or am I trying to learn things different, right? Am I on the right path of learning? How much learning, am I trying too much to learn things that are easy, but, you know, in some way complicating it, right? So I think the person should recognize this, because I saw your name and you're in the room right now, right? This is not my trader, right? So it's up to you if you want to say it's mine or not. Not important, because I would normally get a question like this from many traders. So this is a typical question I normally get from people who are learning. Now, you would know, I would always say this: if you're going to learn to trade, if you want to become a professional trader, it doesn't matter just for your own benefit, just to make enough money to survive, or to be a fund manager, or to do whatever you want to make money, enough money to live, or, you know, just to become very pro in this. You're not going to learn it in a year. Start by, you know, this is why I want you to share this video. None of you will be a successful trader in a year. If you make some successful trades in a year, you're lucky. But you will not be a successful trader in a year. I don't care who tell you what. And, you know, it's not going to happen overnight. You have to really learn this stuff. It's education, it's knowledge, and it's very complicated. It's not that easy. People would want you to believe that, hey, I'm going to teach you this strategy. When you see this pin bar, you wait for this, you click your trade, you put your stop here, and you're going to become a successful trader. And guess what? I don't know a single trader in the world nobody has ever come forward to me as yet. And although I've done a webinar over a year ago, I've done a webinar on pin bars that they don't work. Not a single person has come forward and said, I don't know what you're talking about, because I trade pin bar and I'm successful. Not a single person has until now come forward and said that. I've done a webinar. You can go back and look at all my webinars. I've done a webinars on why support and resistance will never work. And not a single person has come forward and said it doesn't work, because it is too easy. You simply cannot draw a horizontal line in the chart and trade on that and be successful. Right? That is too easy. That will make your life too easy. We will all be millionaires overnight. It doesn't work like that. So I'm not going to go through back pin bars and support and resistance and patterns, those advanced patterns or harmonic patterns, whatever you call, why they work, why they don't work, or why you will never be a successful trader is that. You can go back and look at my past webinars. They're there. I've done that already. And, you know, you will see why they will not work. What I want to do today is tell you what will work, what you need to do, what should be your process. And your process should go like this. It should be for all of us. It's going to go like this. The number one thing you need to get is knowledge. You need to get that knowledge. That's the number one thing you need to get. Right? Because the knowledge is what is going to make you understand what the market is doing. Now, what type of knowledge you get and what kind of knowledge is going to make you a successful trader is what we're going to deal with today. But what is the number two things? When you get that knowledge, the number two things you will have to do is back test it. Back testing. You will have to go and do thousands of back testing to see whatever you're learning. Does that really work? Does it make sense to you? Can you trade it? Do you understand it? Is it really what happens in the chart? Will it be a profitable something if you're to create a strategy to trade that knowledge? Right? The knowledge will give you the strategy, but would that be successful? So that's the number two things you're going to take. And both of these things will take you more than a year. You would have to spend a year back testing only if you really, really are serious about becoming a trader. So it's like actually going to college. It's like a 3-year, 4-year program before you become very successful at this. Right? So I want this to really spread so that new traders who are coming into this will not waste their time, lose their money, buy a $500 course, buy a $1,000 course on pin bar, support and resistance and something, and go into their start thinking they'll be successful. And then they lose their money and they give up. They said this thing doesn't work. Right? So let them get that. Let them spend the first year doing these stuff. And all these stuffs are free. Go through. There are a lot of free stuffs on the internet. All of this is free. And after you've done all of that, you might not see the success. You might not see anything. You can demo trade it and see, and it will not work. And then the number 3 things you need to do is learn how, if whatever you learn is working, then you have to use good money management. How you're going to risk your money. Money management and risk management. How you're going to risk your money, how much you're going to risk, how you're going to trade this thing. So these are like the steps you would have to go through if you're going to learn. But today, I'm going to talk about this part. Some of the things, what works, what you should learn. Right? What is it you should learn in the trade? Should you learn about pin bar? Sure, you can learn about it. Should you learn about support and resistance? Sure, you should learn about it. Should you learn about the patterns that exist? Sure. You can learn about every single thing that exists. You can even go back test them if you have the time to. But most of them will not work. That's a shortcut for you that they will not work. You still need to know what they are. If you want to be a trader, you need to know everything. But as a strategy to trade them, they're just not going to make you successful. So what will make you successful? Something that is as old as the charts are that we all know, because not one person, but many persons have told us. If you've read about a Dow theory, you would know that the market moves in 3 waves pattern. If you read the Elliott wave theory, you know that the market moves in 5 waves and 3 waves pattern. It doesn't matter what, if you look at most of the very, very, very big theories that exist about charts, they will all tell you one thing, that the market moves in waves. Whether it's 3, whether it's 5, it doesn't matter. The market moves in waves. That is the number 1 thing you should learn. And if the market is moving in waves, support and resistance is irrelevant to what the market is doing. You can find some support and resistance somewhere. It doesn't matter, but it's irrelevant to what the market is doing. Right? That's just a way to, that's trying to simplify it to hope that this will work for you. But it will not. That's the point, because the market moves in waves. And if you're drawing a wave, let's just pull this chart down. And if you're drawing a wave and you're putting lines across them, you're going to either do 3 things when you go to those lines. You're going to stop, you're going to break it, you're going to bounce off it, right? Those are the kind of things you will see, but that is irrelevant to what the market is. These lines will give you no clue what to do when the market comes here, or when the market comes here, or when the market, because you notice every time the market comes to that line, it's doing something else. And that is why it becomes irrelevant. You can try to make it relevant, but finding a nice spot, like, you know, if you're using this chart, you could go and say to somebody, man, if you were trading support and resistance, you know what you would do here? This is a great support line. You see, when they hit that, that's a support line you should buy. Let's look a little further. What happened here? And guess what would happen if they do fall here? You see, they make this relevant to you, but it is irrelevant. What the market is doing, it's simply making its waves. Right? It's simply making waves. And because it's making waves, you can put this line anywhere and it would be relevant. If you put this line, if you take this line up from here and you put it here, it's very relevant. You would look at this, that the market is making some noise here. And it's making some noise here. And it probably will make some noise here. Right? But that is also irrelevant. So what we know for sure is one thing: the market moves in waves. So if you know that for sure, and we've been told that from very, very long ago, and everybody agrees to that, nobody can look at a chart and say, you know what, this thing does not move in waves, right? You can't look at this chart and tell me, man, you're not seeing the wave in this, right? You can't tell me that. So since you can see it, what you need to do, the only thing you should ever learn to do, is to master this wave, is to understand the concept of the wave theory. How does it work? There's so many theories also wrong, like I said, in the wave theory, right? Those are works that you can study. They're past works. They get better. They're enhanced, right? We understand why I clearly understand why Dow says it moves in 3 waves. I also understand why Elliott says it moves in 5 waves. I also understand the limits to that. The limits to that is they never told you what is a wave, right? They never told you what is and the problem is, which is going to be my second part here, is explaining what is happening here and what is happening here and what is happening here. What creates these waves? Because that is the next question I got from another trader, and I think that is the question that most of you needs to know. So I'm going to bring that up. That question was on Facebook, and I'm not sure if the person is in the webinar right now, but I'll try to read his question, and if he's in here, he can decide whether he wants to identify himself. Well, he already did. So even before I read the question. So I'm going to go with those, because these are 2 general questions that I plan to deal with today, which is what you need to know, right? So this first question was, as you know, for every buyer, there have to be a seller. That's true. That's a fact. Let's go. The second thing, for example, realize that the market is going to work on wave patterns. If we realize that the wave pattern does work and everybody decides to follow that and everybody's in a buy, so how would the market move? Right? That's his question. If everybody does the right thing and buy, how would the market move? And that is where it's an important question. If you have to have a buyer and seller, it means, and I think this is what is peddled by most of those bogus, and I would say very bogus, trainers out there who tell you the simple thing that the market is a zero-sum game, and that is a crap. That is just BS. The market is not a zero-sum game for us traders. The market does not see us as a traders. We're like microbes to the market. We're not seen in that market. The market does not see you. The market is much, much, much bigger than that. If the market is an elephant, you're a microbe. So you will not be seen. It's not a zero-sum game for you. Some trader doesn't have to lose for some trader to win. That's not what the market is about. Now, for every buyer, there's a seller. That's true. Every transaction has a buy and sell. Here is the big thing. Not all the transactions that you see buy and sell are trading actually as traders like we. They're pretty much typical business. So if you were working in a company called Gazprom in Russia, the biggest company in Russia, the biggest exporter of gas in Russia, and it's huge, it's one of the biggest in the world, they get all their foreign currencies in euro and dollars because they export gas. And all their workforce is in Russia. They need to pay them in rubles. All their expenses is in Russia because the company is a Russian company. So they will need rubles. They're not traders, but they're one of the biggest converters of foreign currency in Russia. For them, it really doesn't matter what the price is today if they have to pay salary tomorrow. They will have to convert that euro or that dollar into rubles to pay their salary. So it really doesn't matter what the price is. They're not market makers. They don't make the market. Although they're so huge, or pay tax or pay whatever, as Julia knows, right? Or pay whatever they have to pay. It doesn't matter to them what that price is. They still have to do that transaction. Are they losing something? Maybe they don't care. That's not that price difference that you're seeing, the price difference that you're actually seeing up and down is already priced into the product they sell, or will be priced into the future product they're going to sell. They may have when they made their first sell, they may have already bought an option to protect that fluctuation of rubles. So when the money comes to them and they have to convert it, they will convert it at the rate on the day that they sold. So that fluctuation has nothing to do with them because they already bought the protective insurance for it. So they're not going to lose. It doesn't matter to them. They're not traders. That's the main thing you have to understand. Most big businesses are not traders. And those are the market makers. Those are people who actually are a volume in the market trade. Companies, big companies, governments, people who do import and export, not us as not even the smaller hedge funds. It's the big banks and the big companies and the big governments that are doing those exchanges, not us. So that thing that is peddled to you that some traders has to win and some has to lose before, that's crap. We can all be winners if we all can guess the correct direction. If we can tell the direction that market is on, all of us with our little pips and with our little standard lots and our little mini lots can make some money off. All we are doing is we are betting on the direction that the price is going to go. So it has nothing to do with us being right. Right? Remember, the people from Gazprom, they're not looking at a chart to decide whether they're going to convert that money or not. Exactly. All big companies will make massive transactions and FX, as somebody just put. If you guys can put the panelists and attendees, everybody will see your message, because that one was the panelists only, right? Stuart wrote that he works for Visa, and Visa makes massive transactions, and that is true. That Visa would be one of the biggest because Visa is around the world, right? But they don't do that as a business. That's not their business. Conversion of money is not their business. Is actually the card. You pay for the transactions you make. That's their business, right? So once we understand that anytime you go into a webinar and somebody said, "Oh, we're the winners and the other traders are the losers," click, leave that webinar. That person has no idea what he's talking about. Just leave immediately. Don't even try to listen to him further. When he tells you it's a zero-sum game that some traders have to win for some traders to lose, and they have the winning traders in their group and all of you are the losers, just leave. Because the market is not about winning and losing. Just ignore that person. That person has no clue what he's talking about. And the next thing people like to talk about, right, is that somehow the market is correlated. It is not. Each economy and each currency is independent of the other. When the pound was falling, the pound was falling. That has nothing to do with euro. That had nothing to do with yen. It had nothing to do with dollar. It had nothing to do with Australian currency. It had nothing to do with New Zealand. It had nothing to do with the rubles. That was the pound falling independently of its own. It's not correlated to anything. The ruble can grow and fall on its own. It's not correlated to anything. So is the Australian dollar, and so is the US dollar, and so is every single currency. There is no correlation in the currency market. Absolutely none, zero. Anybody tell you there is, walk away from there. Because if you don't, you will learn crap, and that will make your trading worse. Do I think there's manipulation in the market? Of course, that's what makes profit. That is what the big banks do. It's not about manipulation. Here's the thing. Let me explain that part, right? But first, let me answer the second question. So the second question is, in trading, there's some traders losing money and some winning. So if everyone plays a game and perfectly, can anyone? Oh, I think I answered that question already, which means if everybody wins, who's going to lose? Well, nobody has to lose, basically. So I think that question answered. I hope you got the answer to the question. So let's go to the next question. Is the market manipulated? It's not about manipulation. And that brings me to the part that I want to explain to you guys. For those of you who will be joining my course, this is the first class in my course. I'm giving you guys it free today. What happens in there? And what happens in there? What happens in this, please? Let me just make that clear. And what is actually happening here? Anybody want to tell me? I should put this as a poll to see, right? Let me just, if I could create this poll, this would be interesting. Let me create the poll. My traders should not take part in this poll because you know the answer to it. I wanted to see, how do I create the poll? I can't even find where they, why did I lost it? Oh, I got it here. Let me see if I can create the poll here. It's here. Let me create the poll. I want add a question. I'm going to add a question. Where, let me see if it allows me to add a question. Good. I should be able to. Give me 1 second. I will just put 1 and 2. Multiple choice answer 1. You will see which is 1, and I'll put 2 here. Right? And I'll post it for you guys. Save question, and I think I should be able to post that out poll. And put the question, logic question. So you have 1 and 2. My traders, please don't answer. It's only for the traders who are not in my group. Here is it. This would be 1, and this would be 2. Tell me where you think more transactions are happening. Bigger transactions. Price move away very sharp in that one, and price is not going anywhere here. Where do you think there are more transactions happening? Where the price moved away, or where the price is doing nothing? One is this one, the impulse here, where sharp impulse, huge transaction, you would say, right? And this one, where do we have more transactions in volume, in terms of volume? You can actually click on the poll. You should see the poll, right? Oh, you misclick, no problem. We'll have some misclick. We'll correct them. So I'll just take it at this, because not everybody has done, but I guess the rest of them are my traders. So I'll just stop it right now. So let's end the poll. We'll end the poll, and I'll share it, share the results. So 80% said number 2, and you're correct. This is where all the transactions are actually happening. There are very, very few transactions in that. So is the market really manipulated? Is this happening because there was a manipulation in the market? No, that's not so. That didn't happen because that is how money should be made in the market, actually. The market was actually telling you where it's going to go. So what happens here is this. It's very simple. Let's think of it this way. And it's very easy for you to understand. I'm going to make it as simple as I can so everybody can understand. Just think of yourself as a, I don't know, you're running a shop. Let's say you're running a big store, right? And your store sell Swiss dollars. You can take the Swiss dollar to be anything. I don't know, your store sell mangoes, for example. You would go and you would buy mango. You would see mango selling at a price here, and you go to bigger market, wherever that is, wholesale or wherever, and you'll be buying mango here at this price. So let's say you buy mango $1. It is just natural that you will have to sell that mango more than the cost of $1. So you'll probably sell it for $1.25. That's just natural, right? But what is it if when you finish selling these mangoes and you go back to buy mangoes, the price of mangoes now is at $1.50? Do you stop buying because of that? No, you keep buying here. But where you're going to sell it, you're going to sell it at $1.75. What if the price of mango, and let me change the color, when you go and you buy, the price of mango is not $1 but 50 cents? You will buy and you will come and you'll sell it for $1.75, right? It doesn't matter what price you buy, you will have to sell it more expensive to make a profit. And that is the natural thing of buying and selling. Banks are in the business. The banks that are buying and selling the currencies are in the business of buying and selling it. So some banks are not in that business. How does that apply to banks? Some banks are not in the business of buying and selling. They just take a cost on the transaction fee. And that is what makes the currency little expensive. What are the banks? All this money will have to go to some bank. So let's say it's Citibank. Citibank is one of the big banks that will eventually get all those trades come to them from the smaller banks and from the brokers and from whoever. It will have to get to Citibank at some point. 4 or 5 of the bigger banks, right? And what is going to happen is they're going to take in all the transactions, buys and sells. They never stop taking in buys and sells. And when you see something like this, what the market is telling you is that transactions are happening in large quantities at a very, very defined area. And this is controlled. If you want to call it manipulation, it's okay, but this is controlled. This is somebody big enough to say, if you want to buy, I will accept all your buys in here. If you want to sell, I will sell to you right in here. If you want to buy, I'll sell to you right here. And if you want to sell, I'll buy it from you right here. I will decide that at this price, I'm buying and selling. But at some point, that person, that bank, that big whatever it is that is putting those orders or accepting the orders within that limit will stop accepting orders. And when they stop, two things are going to happen, or two things could happen. The market will either move up or the market will move down. And what would make the market move up and down is what are the remaining orders coming in when that big order that was there accepting, when that big person accepting all those orders decide to stop doing that. Is there orders to buy? If more people want to buy but nobody wants to sell, right, the price will go up. So if there are more orders coming in from bigger companies to buy, let's say this was Swiss, they want to buy Swiss, right? The cost of Swiss, let's say in euro, they want to buy euro, the cost of euro will go up. If there's nobody willing to sell. If there's people willing to sell, the price is still going to be here. Right? While this is happening, there aren't many transactions. It's just a move away from the price. It's like an auction. So you go out in the street and you said, I would like to buy. And nobody say, oh, I'm not selling. Okay, I'll buy higher. Nobody's selling. Okay, I'll still buy higher. Nobody's selling. Okay, I'll buy higher. And when it reaches this price, somebody says, oh, I'll sell. That's okay. I'll take it. I'm here. I'll take it from you. So for market to stop moving, there have to come in enough orders to fill the demand. Some people like to call it supply and demand. I like to just let you understand it in orders, right? Because it's not so much supply and demand is more to products and the stocks, but not so much to currencies, because currencies is in constant circulation. It's whether the order is going to be filled or not, which means is there somebody who would accept that price and said, okay, you want to buy, I'll sell to you at this price. The same would happen here, and the market will go back into that transaction again. Transactions are going to stay there until they're all filled. Nobody wants to buy and sell anymore at this price, and orders are still going to come in. So wherever the orders are dominant, the market is going to move the market. Now, I'm not saying who are creating those orders. Those orders and the buys and the sells can be created by the same set of banks. Are they manipulating the market to do that? No. They're simply looking at their books. So let's say you're Citibank and you look at it and you have, oh my God, you have so much euros. You have 50% of your whole reserves as euros, and you don't want that much euro because fundamentally you think euro is probably going to get cheaper for some reason. Or you bought this euro, and you want to get rid of it. You want to sell it for a profit. You can start selling. And if there's nobody willing to buy, the price is going to drop. So you're going to keep selling because you want to sell it off, right? You think you can go and buy it much more cheaper for whatever reason, right? So you're going to sell off. And if nobody's accepting your sell, the market is going to drop. If there are people accepting, the market could go down very slow. The slowness or the speed of the market will demand on not only is there bigger orders coming in, but how many opposite orders are there. And by opposite orders, I mean simply business. I don't mean they're manipulating. I mean they're doing their business. So I don't know, maybe at some point in Russia, Gazprom, they said, hey, we're going to sell 1 billion euro. You can imagine what would happen to the price of euro in Russia if they just decide one day we're going to sell 1 billion euro. But here's the problem. They don't have a bank that is going to buy 1 billion euro from them immediately. They can't find a bank right now to buy 1 billion euro from them. Because once they say we're selling 1 billion euro, all the banks go like, wait a second. Why is Gazprom selling 1 billion euro? What is going on here? I'm not buying. What's going on? Why is Gazprom doing that? See? So Gazprom has to sell that euro in smaller quantities constantly so that it's not creating that boom and the price drops very fast. Remember what happened to the Swiss National Bank when they said, hey, we're pulling that floor we had there. We're no longer going to hold it. We're no longer going to peg the Swiss to the euro. What happened? The Swiss to the euro, boom, everything fell. Why? Everybody said, wait a second, why are they doing that? I'm not going to do anything. I'm out of the market. Everybody's out of the market, and it fell. It fell to a level where everybody decided, oh, well, this is a good area to be getting back into the market, right? So let's all get back right into there and start buying and selling again. That's how the market moved. That has nothing to do with manipulation as such, or you can call it manipulation if you want, because somebody did make a lot of money out of it, and I think it's the Swiss National Bank who made a lot of money out of that, right? Because they accumulated everything, and then they said, hey, goodbye, guys. We're not keeping that promise. You're bad luck, right? We didn't tell you to go and buy. We didn't tell you to buy it. You decide to buy it, but we just made a promise and forget about it. We're not keeping it anymore, right? So that is what happens in the market. If you understand what happens in the market, this is what actually happens, right? You just have to understand it. Now, can we read the market? Can we look at what the chart is telling us? Remember, the chart is the only true reflection of what is happening in the market. Forget about the news. I know a lot of traders like to say, well, I trade the news. Well, I'm like, you don't trade anything. You have no idea what you're doing. The news is feeding you whatever they want to feed you, and the market will do whatever it has to do. There is no connection between what the news is coming out and the market. Now, does the market move during news time? Of course. That is the best time that they can use to move the market, because that is the time when transactions are happening least, right? No bank is going to go trade when non-farm payroll is coming out. So that's the point of time when you can move away from the zone. Remember, the market moves faster when nobody is trading. That's what you have to understand. The market moves faster in any direction when there are little transactions. When there are more transactions, the market does not move a lot. That is the consolidation, the accumulation, whatever you want to call it. So when you understand that concept, that is what creates the waves. That is why the market moves in waves. Now, can you read that? Of course you can. That is what we do. We teach you how to read that market, the way it behaves, how to understand all these patterns, how to understand all those concepts of the patterns, how to understand when the market is going to go up or down. And how we know that? Well, they're actually telling us. Because it's simple. It's very simple. Give me 1 second, please. It's very simple. It's how the cardiologist reads your cardiogram. It's how a seismologist reads the chart. It's the same way we read this. Right? It's the very same way we read this. We look at patterns. We understand these patterns. We know how they behave. We look at the patterns themselves. We look at what type of patterns are created. And then we look at how these patterns, when created, how they behave. We're getting some noise? Okay, 1 second. Okay, can you guys hear now? It's clear? Hello? Nope. Let me try. Okay, is it better? Good, let's go. Yeah. So this is what we do. And this is what you should do if you want to be successful. Not about pin bars, not about support and resistance, not about all those butterflies and animals you're going to find in the chart. It's about what the market is doing and what kind of transactions are happening. It creates a specific patterns. So let's say they're planning to buy big. They will have to start doing something. They will have to start doing some kind of transactions. If they're planning to sell big at some point, they will have to start doing some kind of transactions. And when they start doing that transactions, when they start doing all these transactions here, 1 second, lost my cursor here. When they start to make all these transactions here, we look at it and we said, guys, see all of that transactions, you know what that is telling us? When we look at all these transactions, we said, be careful, we know these transactions. See? That's it. That's how simple it is. Now, it looks simple here, right? I know all of you are going to say, hey, well, this is simple. Why do we even have to study? This thing will take you about a year to really grab this concept. What I'm outlining to you is the basics of what the concept is. It's going to take you about a year to master it. So it's not as easy as it is. It's not as easy as I'm showing you right now, right here. You're looking at a chart that I've already prepared. We know this, we prepared it, but you're looking at something that I have done, and I've spent years mastering this. Because sometimes you see that consolidation and you said, well, I was trying to buy it, but it went down. Well, you probably read wrong into it. And sometimes even I read wrong into it. Not that it's incorrect. Of course, it's less than you would do, because I think you've been looking at my charts, you've been looking at my forecast for a very long time. And then what we do is when we forecast the direction, this comes to the next part of the webinar that I want to do, you guys, and then I'll take questions. Is when you forecast the direction, you decide how you're going to trading. That is what trading is. This is what I was showing you there, is the knowledge you need to have to become a trader, right? So what I just showed you, everything I just showed you is understanding what the market is doing. If you don't understand that, if you don't grab that concept, if you don't learn that, right? If you don't do all of that stuff, then you will never be successful as a trader. Means you're trying to trade without knowledge, right? So you first have to get the knowledge to trade. And when you get that knowledge to trade, when you grab that concept, you decide how you're going to trade, right? And that's what comes down to what basic trading is. Trading is very simple. We all trade our bias. What that means? It means you have to have a bias in the market before you can trade. I see people come in and say, well, I don't have a bias. Well, then you are not trading. You must have a bias in the market. You must decide whether the market is going to go up or it's going to go down. I remember one guy trading support and resistance said, oh, well, I don't make forecasts in the market. I'm like, well, then you're wasting your time. You're not a trader. Traders make forecasts. That's what you do. If you're going to buy euro, your buying is because by your forecast, you decide by your bias, you decide euro is going to go up. That's why you buy it. And that's a forecast. If you said I'm buying euro, you're already telling people I believe it's going to go up unless you're crazy, right? You're telling people I believe euro is going to go up. That's why I'm buying it. That's the forecast you made. Now, what creates that bias is the problem. The problem is if you're using support and resistance to create a bias, to create a forecast, that doesn't work. So you can't tell people you do forecasts. But when you use wave analysis, it is a forecast tool. That's the problem. It gives you, that's a good thing about it. It actually gives you forecasts. And if you're going to make forecasts, you want a tool that gives you forecast. Not something that says, when it breaks this level, buy. That's not a forecast. So you need something that shows you direction in the market. And that's what I do in my weekly webinars. I show you direction in the market. I don't tell you how to trade it. I didn't give you a strategy there. I'm showing you direction of the market. Now that you have the direction, it's up to you to get a good strategy to trade. So you have your bias. You decide it's going to go up. How do you trade that? And that is where your strategy comes in. What type of strategy you're going to use to trade it. Now, we have a number of strategies. The breakout strategies, all of you know about it. We have fib strategies. We have a number of other types of strategies that we use that you probably don't know about as well. And strategies are limited in their way. They're not perfect. No strategy is perfect. But what is perfect is if you have a very good strategy that follows rules. It will be good in that you might not get into the trade when it's going the opposite direction. Let's decide, I decide I'm going to buy euro. Let's take this very same chart. Let's decide I'm going to sell this chart. Let's take this out. And let's say I'm looking for a sell. My bias tells me, my whole analysis is downside. And this thing goes up. Somebody goes, hey, look, that guy. What is that guy doing? He said he's going to sell it. What up? Well, that's okay. I'm not in the sell. My strategy will prevent me from being in the trade if it's still going up. That is what your strategy should do. When your forecast is wrong, when your analysis is wrong, your strategy prevents you from getting into the trade while you shouldn't be in the trade. That's what strategy should do. Prevent you from getting in trades when you're wrong. But if you're right about it, then it breaks the strategy to go here. You should have a strategy by rule that will give you that trade. That is what a good strategy does. It's not about whether you're right and wrong on the forecast. That's a different story. You've created the forecast, you've got your bias, you decide you're looking for a sell, and now you're waiting for that sell. Your strategy prevents you from getting into that if it doesn't go down. And that's what we do. That is what you call a good strategy. That's what you need to back test and say, hey, where should we sell this thing? And this is where 90% of the traders lose their money, not in their direction, not in their forecast, not in the in understanding it so much so good. In their strategy of entering the market. They enter at the wrong place 90% of the time and they lose their account, because when they enter wrong and it breaks and it's going against them, they have no idea what to do. They have bad money management, and then they lose their money and then they watch it turn and fall. Guess what? This thing could do this. And if this continues to do this, as long as there is not a change in the structure, I will still be looking for a sell. It could continue to do this. And if there is the change in the structure, I would still look for a sell. If I see a change in this structure, I would be looking for a buy. And I should have a strategy to get me into the buy at the best place. See? That is what it comes down to. That is how it's going to happen. So it's not about whether I'm wrong about this trade going up, wrong about trying to sell it. Because if I'm wrong, I wouldn't be in the sell. It's that easy. You shouldn't be in the sell if you're wrong about it. But the next thing that I want to tell you is, if you're very good at understanding patterns and structure and all of that, and you're wrong about a trade and you accidentally got in at the wrong place, but you understand how structure moves and all of that, you have a very good advantage of getting out there for break even or for a small profit. And that happens to me many times. Mike is getting worse. Give me 1 second. Let me see if I can help that. That's why they say it. And I'm trying to save many of you. That is why I want all of you guys to share this video as much as you can on all your social sites. Let new traders hear this before they go buy some crap. Let them spend a year thinking about trading. Let them spend a year learning about trading. Don't buy any course. Go learn about trading. That's what I want them to do. Because they will hear all of that stuff. Like buy low, sell high. They will hear this stuff, follow the trend, and they will have no idea what it means. And nobody can explain that to them, what it means. I'm not telling you to buy my course. I'm saying don't buy any course. You're not even going to allow to buy my course if you don't have a year experience. So this is not a promotion. This is a prevention from getting you guys, getting new traders who are 1 month in the market, who are 2 months in the market, from going to buy a course on pin bar, losing his money and losing his account. That is what this webinar is about. To prevent people like that, to let them spend a year going through all the free stuff, understanding a little more, get some knowledge about trading. They may, after a year, they may give up being trader. So that will be good for them. If they're not meant to be a trader after 1 year of learning all of that stuff for free, they may decide it's not for them. And that's a good thing. It will prevent them from losing their account and losing their money, hard-earned money. That's the purpose. So it's up to all of you to help spread that message. That is what this is about. Prevent these bogus people from selling pin bar course to people and supporting resistance course to people that will make no money. That's it. And to let them understand what it is if they want to be a trader, what it will take to make them a trader. So a lot of them who think it's a gamble, they'll come in and be rich tomorrow, might think twice again, right? And they may not be a trader. They may save themselves a lot of money. Because we know that I get those messages every day, guys. The reason I'm doing this today is because I get that message every day. I get message from people who are saying, I'm saving money to take your account. And I said, no, don't, to take your course. And I said, don't do that. You don't need to save money to take my course. If you're saving money, you're saving money to live, to survive, to make your life better. You should take my course if you have extra capital that you can afford to lose and you're willing to give this a try. Only then. You must have a very huge capital. If you don't have that capital, you shouldn't be a trader. People call me, I have a $1,000 account. Should I take your course? I'm like, no, you shouldn't. Because you cannot get rich off of $1,000. You cannot even survive off of a $1,000 account. The broker is happy you have a $1,000 account because he's going to take that $1,000 from you. Your broker will eventually take that $1,000 from you. You can trust that to happen. He's going to do that. He will be happy to do that. Brokers love people who have small accounts. Because when you have small accounts, you're tempted to overtrade. There's a temptation to overtrade so you can make money. Because if you use good money management, you will not make a lot of money. You can be successful in your trading, but you're not making money, right? It will take you a year to double the account. And if you make $1,000 in 1 year, that's not, you can't live with that anywhere in the world. Right? The minimum, I think the more the better, but if you want to start practicing on micros and minis, at least a $10,000 account. Right? So the more the better you have. So at least a $10,000 account will be good, but not a $500 account or $100 account. Then I've seen people with $100 account trying to be traders. I mean, literally all of you in here know that that is not possible. Is there anybody in here who thinks that is possible? Good luck to you. Because it is not. What do you recommend for the back testing, Forex tester demo? Do all your back testing physically. Don't use any automatic thing. Depends what you're back testing. But if you're back testing the concept of wave analysis, you got to do that one by one, looking at the candles and not using anything to that. I think maybe maybe it is possible. Maybe no, you could get lucky, but I mean, luck is not a strategy. How do you know if it is a trend is dying out? When you learn wave analysis, we teach you that. That's a good question. Sir, can you explain your condition to enter a trade? First, we have to teach you all the analysis of how to analyze the chart, and then we teach you the strategy, and then based on that, you will know how to do it. That's a long time. I cannot do that here now. right? Is this the weekly outlook? No, tomorrow we still have the weekly outlook. This is a special webinar to help you guys and to help those who are new and who are trying to be a new trader, who don't understand where to start, what to do. This gives them a clue where to start, what to do. What can you tell us about wave personalities? Looking back at your webinars, I saw that you look at a lot of the slope of a breakout. Wave personality, they're different. Depends on what pattern you're looking at. The expanding, flat, the running. You just have to learn all of them and learn, be able to identify them correctly in the chart. Each one has its own personality and its own direction. It's going to break, when it's going to break, how it's going to break. We have one trader, trade 1,000, making 10,000, but he is our group and very pro. Oh, you're talking about let me don't call the name yet. You can do it, but like as we said when he shows his account, right? It's not something he can consistently do. You can do it for a short time. Anybody can do that. Any one of you can take a 1,000 and make 10,000. I think it was 3,000. He took to 10,000. You can do that trading on low time frame, but then you have to be very, very careful. You have to be very skillful, like he is, and he did it. He's a good trader. He's very skillful. He's done a lot of studies and he knows what he's doing. Yeah, you can grow it with 1% risk. I'm not saying you cannot grow it with 1% risk. What I'm saying is that how long will it take you to make real money? That's what I'm saying. And if, let's say, you're successful, and this is a good question from Thomas, but Thomas, you only showed a question to me, so let me repeat the question. Thomas says, can I grow a $2,000 using 1% risk? Of course you can do that. Here is the problem with that. Let's say you make 40 trades and you were successful in 35 of them and you lost only 5. And you were only risking 1% and you were doing good, right? So what is your thought that is going to come behind your head? Anybody knows what you're going to be thinking next, right? Why the hell am I risking only 1% if I'm getting 35%, 35 of the 40 trades winning trades? Let me do 2%. So you do 2%, and let's say you repeat the same thing. 35 of the 40 of your trades are successful. What is your next thought? Because you're making money, but because your account is small, the money is not so much. And what is the next thing that comes to you? Why don't I just use 5 or 10%? Right? And that is what breaks all traders with small accounts. The temptation when you're successful to increase your risk, to make it bigger because I was successful. I have met a lot of people and I've seen a lot of people account who said, man, I struggled. I got this account up by 20% the last month. It took me 2 months or 3 months to get 20% there and I'm doing very nice. And then I went and I lost it all in a week. And I'm like, how did that happen? And guess what is the first thing they say? Well, I actually over-risked. I decided I'm going to put the bigger risk on this trade because this one was so good. It looked so nice. And I over-risked and I lost it. And I was like, weren't you doing good not over-risking? Yeah. So why did you change it? Well, I'm winning, but I'm not making a lot of money. Right? He grew his $2,000 account to, I don't know, 2,500 or 2,600. And he was doing very well in his risk management and everything. But now he wants to make it 4,000. So what he did is in the next trade, while he thinks he's still successful, he's going to over-risk on it. And then that's the one that's going to take you out. Right? That's the one that will get you. I'm missing a lot of questions. No harm if I didn't get your question. It's just that the questions are rolling up so fast that I'm literally missing a lot of them, right? Sometimes the 1 hour candles breaks fast and goes in the same direction. There's a way to deal with that. Put an entry order, but you have to be pretty sure that you know when to put the entry order and how to put it. If my goal is not to make money for now because I'm 16 years old and so I learn never risk a lot of money. If your goal is not to make money but just to learn, take a demo and trade it. Don't risk money in the market. Take a demo while you're learning. If you're 16, you have your whole life ahead of you. No need to rush. Take your time. You're one of the lucky people in here. 16 years. I don't think we have any more 16 years people. Anyone else here 16 years? I doubt it. So you're lucky. You have an advantage. You're getting the right information at the right time. I wish I was at that age. Me myself. No, 16. No, I don't want to go back to 16. I'll rather go back somewhere around 25. I'll be okay. 16 is way too young for me to go back. I remember my 16. It was a little struggle then. It's done a lot of, a lot of studies and all of that. 25 is okay. I was in, 18, I started university, though, so 18 could be okay. I'll change a lot of things at 18 if I was there. What about moving average crossover combination? Not. It might help you in very big charts and weekly charts, monthly charts, but most of it is just, it's not going to help you very much. Moving average are pretty much lagging. Let me explain why moving averages are lagging. They're very lagging in when you'll get it, right? Because if you're trying to trade even the euro, right? Remember the moving average, you have to set it with time, right? So let's say, what will happen to moving average when you're in this period? They will calculate that period and the moving average is going to pretty much go flat, right? Because the average that is moving in a daily is very. What will happen to a moving average when you have something like this? They're going to tell you that, that it's going to see a sharp movement. And then what happens after that? Immediately it goes into consolidation. So you will get a crossover somewhere here and you will sell and watch it go back against you. You will get a crossover when that thing is moving fast. When it's moving slow, you will not get it. So, or you will get a lot of false crossovers during a slow move like that. So I don't find that to be an interesting strategy. Yeah, it's the same. Well, Ichimoku is actually moving average. Ichimoku strategy is moving average. If you color the space between moving average, it's just a lot of moving averages, and you color the space in between them, and you call it cloud. It doesn't make a lot of. It's not a lot of difference. It's the same thing. It's just a more moving averages on your chart, and it tells you nothing. What else? Let me see some questions. Thank you for all the good comments, but let's get more serious questions. I like when people say thank you, but you can do that personally. You don't have to do that here. You can send me a message. Thank you. I get a lot of that daily. But let's get some questions going here. Thank you. Relationship between yen pairs and Nikki, I don't know. I don't look for that. There may be a relationship. I don't look for it. If they, if it's like some people look at relationship between the dollar and bonds, of course there's going to be. Right, between the dollar and the bonds itself, there may be, because bonds are about the dollar, right? So they could be related. Like there's a relationship between Pong yen and Euro yen if the yen is moving, right? There's a relationship. It's called the yen. But what if the Pong is moving? Then there is no relationship between Pong yen and Euro yen, because the Pong is moving, not the yen is moving. So, where do you look for the relationship, and how is that relationship going to have any value to you? That's a different story, right? Like, is there a relationship between the price of gold and the US dollar? Yes, there is. That is if the US dollar is losing or gaining value. But when gold is losing and gaining value, there isn't any relationship. The US dollar price doesn't change if it's only gold changing value. So I don't know, maybe they found a lot of gold in Australia and gold price is dropping. When gold price is dropping, gold price will drop in relationship to all currencies. It will drop in relationship to euro, to pound, to the dollar, to everything. That will not change the value of the currencies. But when the US dollar is changing value, and if you're going to buy gold in US dollar and you look at the US dollar gold chart, of course, if you look at the US dollar pound chart, if you look at the US dollar corn chart, if you look at the US dollar, I don't know, what else you want to buy with US dollar? Anything you intend to buy with the US dollar, if the US dollar is losing or gaining value, there is a relationship to that, because that will change value. That is what it is, right? It's not correlated. It's that relationship. I might have missed it, but what percentage size do you risk in attend? It's not just 1%. If you go back in my YouTube videos and you look, I did a webinar on that, money management and risk management. Please check it out. And that is why you guys should share it. You guys can go and share the YouTube links to people so that they can go, and you could actually take those. I did a series of webinars, I think 5 for the week, right? 5 webinars I did in 1 week, where I did all those things, and I explained to people, right? So I'm missing a lot of questions, guys. Sorry, but it's moving very fast. Do you think that the behavior of the market changes in the future and you can change the whole of your strategy and wave analysis totally? Does the behavior of the market change? Not really. We still eat food. We still sleep. We still wake up at a certain time. Banks still open at a certain time. They still close at a certain time, right? Which means transactions are going to most likely happen at a certain time of the day, right? The type of transactions that happen are the same. People buy and sell currency. So that will have very little effect on the wave analysis itself. Can you say that patterns may change variation because of the speed of transactions? They may get a new pattern? a new pattern of transaction because let's say that they change their behavior slightly. Can there be a new pattern that is formed? Yes, that is possible. That does not negate the theory. It just creates a new pattern. And we have actually identified 1 or 2 patterns that Elliott has not identified. And we looked at them and they're very specific patterns and they repeat themselves very often, right? So we looked at that and we said, okay, here, when we see this pattern, this is how it's going to behave. And that's okay. Elliott could not have identified everything. Some things might have changed for that period of time. The structure of the pattern might change slightly. But once you do the theory and you understand this, you understand how to do all of it. And like I said, when you're wrong about a pattern, let's say we were looking for this pattern to break to the downside, but it didn't break. Well, you're not in the trade. Your strategy should prevent you from getting into that trade. So it doesn't matter to you, right? Remember, trading is not about you being right or wrong. It's about you making money and growing your capital. So when you've read the market and you said, I'm looking for a sell here. Let me see if my strategy is going to get me in the sell. And the sell doesn't happen and you're not in it. Well, you're just wrong about the analysis. Big deal. Do you care about that? You don't, because you're not in the trade. You're not losing money in it. That's the whole point. Yep. Somebody just repost all those charts, all those webinars for you. You can go look at them. It's very interesting. You should go through most of the charts, most of the webinars I did. Do you have considered writing a book? Oh, I'm a poor writer. My spelling is miserable. My pronunciation is not good. I will have to get somebody to do that for me. I can't write very well. I'm not artistic in my writing. I really can't. If you know me, that's true, right? People come and say, hey, he can't even pronounce 3. He says 3. It doesn't matter. As long as you get the message. That's my point. Language is a bridge. If you can understand what I say, that's okay. That's all we need. I can't change my accent. I was born in the Caribbean and it will be a Caribbean accent until I die. I have no intentions of changing it. That's okay with me. I can live with that accent. And I like people to have different accent. I enjoy it. Yeah, I like the Jamaican accent too. They're from the Caribbean. I love it. I have a lot of Jamaican friends. I like Indian accent as well. I had Indian friends who I like to, the singing accent, and I like it too. In my group, you should hear me trying to imitate the Indian accent. You would think I'm truly Indian. Jamaican here, yep, that's nice. I love Jamaican accent. I love the Jamaican friends in university. I still have, by the way, not I had, I still have a lot of them. So it's not, we were born there. I didn't have a choice where I was going to born, right? If I had, I wouldn't be born in Guyana. Let me tell you that one for sure. Not that I'm not happy I'm a Guyanese, but if I had a choice, if we all had choices, we'd probably make better choices where we were going to born, right? I'm pretty sure people like Warren Buffett will have about 1 million children if people had to choose who are their parents and where they're going to born, right? You could imagine where you could choose who's going to be a parent and we're going to, hey, Warren Buffett, please put me in that family, right? You don't have that choice. You got to be who you are and be happy about it. I'm pretty happy with myself, right? I'm not in conflict with my accent and, where I was born and what I'm doing. How far back should we go in the charts to see any corrections and the period? You can go as way back as the yearly charts. We study all of those, but if you're going to study those charts only for an analytical purpose, not for trading. Trading, you're comfortable in the 240 and the 60. As a day trader, you should be comfortable within that zone. But simply for, for developing your skills and learning and all of that, you can go back as way back as the yearly charts. We do that. Are we going to share this, share charts in the future? Yes, we will. I asked one of our traders is developing a charting package, right? And I don't want to over promote it too early, but it's going to come out very soon, right? And by the way, sorry if I'm promoting you again, but yeah, when it comes out, you will all have a package to use, right? By the way, he's in the room right now too. You don't have to identify yourself. So it's going to be great. We will have, and we will all post there. I will post, most of my traders will post there. We will give them like a chart each and say, you do on the euro, you do on the pound. So you guys are going to have a lot to come with. And we were hoping that you're going to help us spread the word, right? Remember, if you give this link to one trader, if you help one trader look at my YouTube video, he's going to say thank you, right? And he's going to help another trader, especially this webinar. I want you to share this webinar, all of you. So let me close by thanking all of you for coming. Really great questions. I couldn't answer all of them. I'm sorry about that. We can repeat this the next time. But I want all of you to do me a favor. Please share this webinar on all the social sites. Don't worry if there's not trader there. One trader will stumble on it. Share it on your Facebook page. Share it on your YouTube. Share it on your LinkedIn. Share it on your Twitter. If you manage to get it to one trader, you will save him. He's going to probably write you thank you note that I saw this webinar on your Facebook and thank you. I did not buy that course on Pinbar or something, or I'm still 6 months. I'm still learning free for the next 6 months, right? So thank you again. Sorry for taking up your Sunday. I know this is the time when you want to be with your family and friends. Go back, enjoy. I'll see all of you tomorrow. Take care, everybody. Thank you for coming. And you guys are great. Thanks again. Bye-bye. Sorry I couldn't answer all the questions. Take care.